Hi, my name is Sue Moorcroft. I'm with Baymore Homes at Keller Williams. I'm here with David Baylis, who is with the TLC Mortgage Group through Dominion Lending. We're here to kind of explain a little bit about what's been going on the market. Have had a lot of questions, and I'm hoping that we can give you a little bit of insight into how this has impacted your pocketbook. So first off, we all know that there's been an increase in the prime rate. And I'm going to allow David Baylis the opportunity to really try to explain this so you can understand what this impact is for you.
All right.
Take it away, David.
So as you can see, we've seen significant increases over the last few months in the prime rate, and the way this affects you, the consumer or the purchaser, is on the affordability aspect of it. As prime rates begin to rise, your mortgage payments rise. So what we're looking at here is where interest rates were starting the year in January of 2022. With a prime rate of 2.45, and kind of how it's eroded into the affordability leading up to where we are now with the most recent increase at 4.7%. So for this scenario, we're looking at a $500,000 mortgage back in January of 2022, and we're looking at what the monthly payments would be. Now, to keep that cash flow or that monthly payment consistent as the rates increase, what you'll see is that throughout the months, looking at March, which was our first increase of 0.25%, that monthly payment now would afford $486,000. All right, the following increase was in April. It was a half a point. What that did to that payment or to that cash flow was to maintain that monthly payment would bring your mortgage down to $460,000. So you can see it's eroded about $40,000 in buying power. Now in June, Bank of Canada raised the rates another 0.5%. So taking that percent into consideration, your mortgage amount now to maintain your payment would be $437,000. And then as we know, this week in July, the Bank of Canada raised rates by a full percent. And that had the biggest impact on the cash flow or the affordability of your mortgage. That would bring a mortgage payment down to, or mortgage amount down to $394,000. And that's just to maintain what $500,000 monthly payment would have been at the beginning of the year. So if you look at the factor, we're down about $106,000. What that equates to is a 21% decrease in your affordability if you're comfortable with what a monthly payment was in January of approximately $2,200.
Now, David, just a question. If I was approved for a $500,000 mortgage in January, and it cost me $2,227 in January. If I want to maintain that $500,000 mortgage, what does that look like in current rates?
At current rates at 4.7%, so you're going to see a slight, or in this case, almost a significant increase looking at your monthly payment. Again, we're assuming over a 30-year mortgage. So currently, at the current prime of 4.7, a $500,000 mortgage would have a monthly payment of $2,823.
Okay, great. Well, so that's about a $600 increase per month, right?
It is.
Now, I'm gonna make the assumption we're just basing this on prime. There are things that you can do to help with their financial situation, regardless of what situation they're in, and you can walk them through any kind of, whether it's fixed, whether it's variable. This is really just basically looking at what prime. Am I correct?
That is correct. We're just looking at the effects of the prime with the Bank of Canada rises.
Fantastic. Okay. I'm looking at the cost of real estate over that same time frame. So I think everybody really fully understands between January and March, all hell broke loose and the pricing of all real estate went absolutely bananas. So we're in a situation now where if you take a look at the same spreadsheet, we have in Burlington, if we look at a detached home, that the average median price, so it's not average, it's median. It was about $1.6 million would have been the cost of the average home in January. Whereas now we're looking at 1.2 is the average home. Now we're not 100% comparing apples to apples, but it's pretty consistent with the approach. There are some significant numbers, so the median price holds. Townhouses are similar, where at 1.1, a little over 1.1 in January would cost you about $780,000 now. So although you're seeing less buying power, costing you a little bit more to get financing, you're also seeing a significant decline in the price of real estate. Similar with Hamilton. Now, Hamilton, their detached homes have dropped about 24%. So they've gone from 996 in January to 757 in the current rates. And the current rate just changed. So we may see a slip of more decreases in pricing at this point. Now, the condo market is the one that's interesting, because if you look at it from January until July, in Burlington, it was 720 and now it's about 650. In Hamilton, it was 530. Now it's about 520. So there's not been much of a change in the condo market. So your affordability at that point is going to be less. So I'm hoping that over this short message that we're sending out to you today, that you get a better understanding of kind of how the impacts of all the craziness of the mortgage world and the real estate market and how that actually impacts you. Please feel free to call out to David or myself. All our information is in the chat or in the blurb at the top. And you can reach out to us at any time. We'll be happy to explain this a little bit further and how it impacts you. Thanks so much, everybody. Thanks, David.
Thank you. Thank you.